Okay, welcome everybody. This is Patrick Zielbauer from Infinity Futures. It is 3:30 Central Time on Monday, April 30th. Thanks everybody for coming to the charting event today. I'm going to read through some risk stuff and then we will just get right into the presentation and we'll take some questions. And again, as usual, if you want a copy of the files that we're going to go through today, please feel free to request them from your representative in our office. All right. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, only fund a futures account with risk capital. All right, that means money you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle. All right. Be very conscious of the use of something called day trade margin, which you hear referred to in our business all the time. Use it gingerly. And if you have any questions about futures in general, or if you have questions about where you might fall on the risk capital curve, so to speak, or if this is appropriate for you, please feel free to have a discussion with your representative in our office about risk. We're happy to discuss risk anytime. All right. What I'm going to do briefly here is just, I'm not going to read the whole description here, but this description was written by my boss, Jim Cagnita, in my absence. And I'm actually not a huge fan of going through different features of charts just for the sake of showing that they exist. So what I'd like to do is show briefly some of the bar types and chart types that exist within Sierra, and show a couple of examples that are sort of permutations of things that other clients have sent to me. And then we'll pretty much just take some questions. And I'd like to show a little bit about some of the color background stuff that you can do with Sierra related to the open, high, low, close, and how you can incorporate this language into creating these custom alerts that we talk about frequently. So I will talk about some of this sort of list of features sort of format, and then we'll try to move on with relative expediency. Also, this is one of the few times that I'm going to have you from the get-go bookmark these sections of Sierra's website. So if you are a Renko chart person, okay, if you really enjoy using Renko charts, then I'm going to answer this question to Mary. She was the last person to say yes to me, but I'm going to send this to everybody. This is a listing or a link on Sierra's website that talks about Renko charts. So you could spend an entire year's worth of webinars on Sierra's Renko setup. All right, they have a ton of flexibility. I don't want to go too far into it, not only because I just have never had a chance to sit there and pour through every page, and I haven't purchased indicators that rely on Renko charts like a lot of my customers have, and so on. So I'm just not as interested in it, which means I haven't focused on it as much maybe as some other folks have. But Renko charts are one of the strong points of Sierra, and they are very flexible. I will show a couple of examples, but then that's kind of where we're going to leave it. If you really want to get into the documentation, that's the best place to go. All right. Okay, so what I did here was I put together 4 different chart books. All right, one of them has an example of a chart type that a Renko chart type that Sierra uses called a Flex Renko. One of them has this sort of amalgamation of different charts on here. We're gonna start there, and then there's a couple other ones here that are basically designed to demonstrate the difference between tick and time or volume based charts. And we'll offer some examples about why people use each of these. And then there are some aspects of this that I think are particularly useful. And then there are some aspects of it that I find to be a little bit redundant. But again, there's a lot of personal preference in charting, and that's probably going to come through here today. All right, so the first thing is, where do you control this stuff? So when you open up a chart, how do you get to the place where you make these sorts of changes to make a chart look like this? All right, the way to do that, and we're going to start with a new chart book here. If you just go to new chart book and open up any chart, I'll open up the NASDAQ here. When you right click on the chart and go to chart settings, there are basically 2 places we're going to focus on for the purpose of demonstrating these different functions. The first is right here in the middle where it says bar period type. So when you look at days-minutes-seconds per bar and you see 0-5-0, that means 0 days, 5 minutes, 0 seconds per bar. In other words, that's a 5-minute chart. All right, but if you expand this drop-down list, you're going to see that there's lots of choices here about how you can have these bars built. Some of which I and some of my customers use frequently. Others, to me, it's a little bit overkill, but that's charting. On the right side, there's a section here called graph draw type, which is also relevant to this discussion because there are some really neat graph draw types here that can replace the use of lots of extra data that can chew away at your ability to, make good decisions through a very real thing in trading, which, I believe in, called decision fatigue. So in other words, there are some things you can use out of this menu that might just whittle down the amount of stuff you have to be looking at on a daily basis. So we'll cover some of that. But just in general, when you are going to make changes to a graph draw type, or if you want to change a chart from one type to another, there are some keyboard shortcuts you can use. Okay, but there are also, if you want to do it manually, you just right-click chart settings, and this is generally where you're going to be focused. All right, so let's go back to that big example here, and we're going to go through each of these very, very briefly, and I'll show you how you can make them look this way. And then, again, if you want a copy of the file for reference, you're welcome to have one. So this one up here is just a volume chart. This means that every bar represents 1,000 contracts traded. So this, like a tick chart or a range bar, is something I would consider an activity-based chart. Okay, we're going to talk a little bit later about why people use activity-based charts from a very broad standpoint. But if you want to change the value of a chart, or if you want to make a chart that's like a minute-based chart into a volume chart, you just left-click anywhere on it, and you can just type in the number of contracts. So I'm just going to type it, but you'll see it show up right up here, 2000V. That means 2,000 volume per bar. Push enter. It's going to reload the chart as a volume per bar chart for 2,000 contracts. So this means you get a new bar every 2,000 contracts traded. Okay, therefore this is what's called an activity-based chart. Okay, it's not based on any amount of fixed time units. One thing also that I'll mention while I'm here is that if you do go to that chart settings menu, and the way to get there very quickly, you can hit F5 on your keyboard. If you are using lots of small time frame charts like 55 ticks or 500 contracts for volume or something like that, if you're not looking way far back in time and you're not using indicators that rely on tons and tons of bars, you can reduce this days to load function to a smaller value like 1 or 2, and you will find that the chart loads super, super fast when you do that. So if you are running lots of stuff and you're running your chat rooms, your stockbroker platform and all that stuff, and it feels like it's hanging a little bit, or it just is not keeping up the way you want, one way to reduce the performance hit that this program has, which is not a big one, by the way, is to reduce the days to load function. So that's particularly useful when you're looking at small time frame charts and you don't need a lot of historical data. All right, so if I change this to, say, 1,000 contracts now that I've reduced the days to load to 1 or 2, 1000V, you see it's going to load what feels like instantly. That data is stored on your hard drive. It's not re-downloaded from the server every time, so it's really quick. All right, so that's a volume chart. This one, 233 ticks or 233 trades. Okay, those terms are synonymous. All right, so if I want to make this 500 ticks or 500 trades, 500T, enter, it's going to reload it as a 500 tick chart or a 500 trade chart. Same thing. Similarly, if I want to reduce the resource footprint here, I can just F5, change the days to load, say to 2, hit apply and OK, and let's go ahead and make this 1,000 trades. 1000T, enter, reloads a lot faster. Okay, there's a 1,000 tick chart. Range bars, okay, this is where every candle represents a fixed range. In this case, I have it set to 8 ticks, which is 2 full points in the NASDAQ. So this is another activity-based chart where if the market is dead in the water and it's not breaking out of this fixed range, we just stay in the current bar forever. But as soon as this bar establishes a new and breaks out of a new 8-tick or 2-point range, a new bar is formed. So the thing that's nice about range bars is that you always know the high and the low of the bar. All right, that makes trading sound really easy, but what you'll see is that when the market takes off and is moving quickly, lots of bars come really fast. So if you're going to trade, and this we'll talk about this a little bit later, if you're going to trade using volume, trade, or tick or range bar type charts, you need to be prepared for getting a big flurry of signals in a really short period of time, because there's a lot of times where nothing's going on And then there's sometimes where you're going to get a lot of bars really, really fast, especially if the market's volatile. All right. This is another bar here. I actually have never really experimented with this one. It's called a reversal bar. I believe this is similar to a Renko chart in some respects, but it sounds like you're waiting for a 6-tick, in this case, a 6-tick reversal before a new bar is formed. All right, that's another option that exists here. This down here is a Renko chart. Okay, there are a million different ways to display Renko charts inside Sierra. The most common way, the basic way, is to just choose Renko bar in ticks and put a number of ticks that you want in here, which mine is set to 3. If you don't want to see the wicks, you would have to leave this option here under graph draw type selected. Renko bricks. Notice Renko bricks is selected, not Renko bricks with wicks. Okay, if you have the wicks on, it looks like that. So some people leave the wicks on because they want to see the range of the bar. If you don't have the wicks on, you're not really seeing the high and low of that bar. You're really just getting a new bar when the 3 setting has been achieved. But I would say in general, most people actually don't want the wicks displayed. Some people get this open by default. They see that it has wicks and then they get confused by that. So most people do, if they're using Renko charts, leave the wicks off, especially in this format. All right, this one here, a 200 delta. This, I actually did not know this existed until today, believe it or not. So there's actually a bar period type in here called delta volume per bar. And what this basically does is it takes the range between the bid volume and the offer volume as a fixed value. And in this case, it's 200. So you get a new bar when that 200 delta value is achieved. So once there's a 200 contract disparity between the bid and the ask volume, then a new bar is formed. So I'm not sure how you could make sense of that. To me, I think there are much better ways to display volume delta than something like this, but this would be another activity-based chart that at some point someone I'm sure has asked for, and that's why Sierra put it in place. Okay, now going into the chart settings field here, there are some graph draw types that we're going to talk about very, very briefly. One of them is point and figure charts. I actually have never used a point and figure chart in my life. There's a couple of educating partners that we've had that have talked about point and figure charts. They do exist. You just select point and figure XO and then put your settings in here. Again, not going to spend a lot of time on that, but if you do like to use point and figure charts, or if you're interested in them, just know that they are available here. All right, that's another one. This one here, this is more just an aesthetic thing. This is just a regular 5-minute chart. You do have the choice in Sierra to keep the bars hollow. Sometimes people do this when they're using the color background study, or if they have the color background set to a certain way where they prefer to see that instead of the red and green that we typically see with candlesticks. So, not a huge deal, but if you do want the bars to be hollow, that exists here. All right. This is a mountain chart. It's kind of like what you would see maybe a volume chart look like at the bottom of the screen. I don't think I've ever had anybody ask me for this, but I thought I'd throw it in there because it's available. Same thing with this one, line on close. This is obviously a lot more common than using a mountain style chart, but most of the people who use line on close charts use the line on close look and feel to overlay one market onto another. So for example, if you're looking at the S&P and you always want to know where the price of crude oil is, like I do, or the bonds or the yen or something like that, the line on close function serves its purpose, because I don't actually care that much about the bar. I just want to know where the price is and where it's been relative to the last few hours. So line on close might be useful in that context. Okay. And then these two are actually pretty interesting, and there are a lot of different ways to have Sierra display this information. I'll expand this one here just so we can all see it a little bit better. But this is what's called, this particular bar type is called a bid-ask volume bar. So this is kind of neat because this is a 5-minute chart, and what it does is it shows you the bid volume and the offer volume in the bar, but it also widens the bar based on the relative volume to other bars on the same chart. So it's really not a surprise that if you look at this big thick one here on the left, that it's an 830 bar. So this is right when the volume starts getting really big. Now, if we zoom in a little bit and make that bar go away, then what you're going to see is other bars are going to expand because that big bar is no longer present. Okay, but essentially what you're seeing is these bars as a function of how many contracts actually traded in that 5-minute period, during periods of heavy volume, you're going to see thicker bars. And so if you're looking at something in real time, and I think you're probably going to know if the volume is spiking just by looking at the chart or by looking at other studies that you have. But if you are interested in general in something like this, this does exist. All right, this one to the right of that is similar, except it's really not splitting apart the bid and offer volume. It's just showing you the color of the candle. So if it's a red candle, the whole thing's red. If it's a green candle, the whole thing's green. So again, just a couple other things you can display here. This one here in the bottom left. All right, this is what's called a candle price volume bar. So this is not separating out the data in terms of bid and ask volume, but it is showing you wider bars when there's a lot more activity. One place that I do believe this kind of thing could be useful is if you were looking at something on a very, very short time frame. So if I were to duplicate this chart to that new Chartbook 7 that I just opened, let's go to there for a second. Let me just bring down the days to load here just a bit. And I were to go to something like maybe 1 minute. So on a 1 minute chart, this becomes a little bit more pronounced. Now, it's pretty obvious that if the market is falling like this, you're going to see heavier volume. Okay, that's not really much of a mystery. But I could definitely see it where if you were looking at something on a really short time frame, let's just for kicks go to 10 seconds. This is a 10-second chart. So it is kind of telling. You can see when the volume is relatively high compared to the rest of the chart. So if you're looking at if you're looking at a strategy or you're trading a strategy that cares about volume spikes, then this is something you may be able to incorporate visually into the way you look at things. All right, this one is the same thing with the hollow bars. We won't even really go there. This is an open, high, low, close chart. Okay, so this is like OHLC bars. All right, OHLC bars, nothing fancy. Okay, everybody knows how to read those or have seen those probably forever. And then in the bottom is just a regular 5-minute chart. So this is basically just a reference. There are a lot of other choices that exist in this menu that are not covered here just because I feel like a lot of this is pretty redundant. It's just pretty typical of a program like Sierra to try to cover every single base. There are some situations where in this program there's just a lot of choices. So I wouldn't spend your time going through every single one of these things. These are probably the main ones you might want to look at. There's probably a few here you'll never look at again, but Sierra is a great program, and we do want to make it clear, that it is that there's a lot of flexibility here. All right. So does anybody have any top-level questions just on this general capability about Sierra? If I can answer, I will. If not, I will look into it. But I don't use much of this. Some of the stuff that I look at is incorporate some of these concepts, but just not in this view. Although I could see there's a couple things here that are making my brain turn that I could actually feel like I could use. So if you have any questions, please feel free to ask. All right. And while we do that, I'd like to go briefly over these two time and range comparisons. So on the left-hand side here, this is a 5-minute chart of the NASDAQ. And then on the right-hand side, this is a 2.5-point range bar. And what I was trying to achieve here with this is I was trying to show about what kind of figures you'd have to use to get about the same number of bars. So on the right here, I have a distance of 20. You can see the number in the bottom right, 20, and the number here, bottom right, 20. All right, what that basically means is that this is a measure of how far apart the bars are from each other on the chart. And what we're seeing is basically the same number of bars on each one of these. But this one only goes back to 2:30 in the afternoon, and this one goes all the way back to the morning. So in an effort to sort of feel out how much range you would need for each of these bars to make this chart cover the entire session, as the chart on the left does, you would have to play around a little bit with the setting. So for 2.5-point range, that's 10 ticks. So let's go 20 ticks. So I'm just going to left click anywhere and do 20R for range. You can see it shows up right in the header up there. And I just push enter, and it's going to reload the chart as a 20-tick range chart. So now that doesn't even really take us much further. That really only goes back to 1 something in the afternoon. All right, this is actually pretty typical for the NASDAQ because of how volatile the NASDAQ can be. But let's go a little further. Let's go 40 ticks. So this means we're getting 1 bar every time 40 ticks of range is achieved. And now we're a little bit more in unison here. So this is about 8:15 Central Time, okay, right here. And then this here is about 8:30. So right around this green bar is kind of like the opening price of the stock market. It looks like roughly, give or take a few. And what you're generally, this is not an extraordinary example, but one thing that range and tick bar users like to do, one reason they like this style of charting is because what this style of charting will do is it will eliminate or reduce the impact that one bar has on the entire chart. So have you ever had those situations where on the open, there's like a massive 3-minute bar and then the entire rest of the chart is flat? And so you end up with this like one bar that sort of monopolizes the screen. The objective with activity-based charts is to smooth the chart out and reduce the likelihood of you having one bar monopolizing the whole screen. Here's another example. Okay, so this is also not an extraordinary example. This is a volume chart. So every one of these candles on the right-hand side is 2,500 contracts traded, and then on the left side is 5-minute bars. So these look quite similar. There are plenty of situations where a tick chart and a range bar will look very, very different. This is not one of those times. But I actually, in all fairness, I was trying to make these look pretty similar because I was trying to get all the way back to 8:30 on each of them. So for the NASDAQ, about 2,500 contracts per bar gives you roughly the same view of a 5-minute chart in the NASDAQ. All right, that's going to change obviously from one market to the next. All right, but I was using the NASDAQ as an example. So this is kind of a way where you can figure out how quickly these markets trade in terms of contracts and range. All right, let's look at a crude oil one here real quick. So let me just bring up. So crude was a mover today. So this is a 5-minute chart of crude. Let's duplicate that, put them on top of each other. And then this one down here, let's make, oops, that's 10 ticks. Yeah, it's a little bit more stair-steppy. So typically people who are looking at range bars, they like a chart that looks more like this, a little smoother than something like this. So if you use indicators that are getting thrown off by one bar, as much as that is true, it is the way the chart is being built, then you may want to explore the use of range bars. The only downside, one of the only downsides, I will say, with range bar or activity-based charts is you just need to be prepared, especially if you're looking at a very small time frame, to get a lot of signals in a relatively short period of time because you will see flurries of activity. All right, so these functions all do exist here. I'll save this one as well, so if anybody wants to make their own comparison, please feel free to do that. Another one I wanted to show before we go into some of the more fun stuff with the color background studies, and I have a couple ideas that were inspired by some of my other clients here, is this Renko example. So I have gotten a lot of questions about something. There's another company that makes an add-on for their charting program. I don't know what it's called, Renko or something like that. And people are asking me if we have that. And the closest that we've been able to get this, there's a couple people here who have used a chart like this or with similar settings. So this is called a Flex Renko chart. And I know that if you've never looked at a Renko chart, this probably looks completely nuts. I agree, it does look that way, but this is another one of these styles of charting that our clients are engaged in. And if you've seen something like this before on another program and you're wondering if you have to buy it to use it here or anywhere else, the answer is no. All right, so we won't spend a lot of time on this particular chart type, but I just want you to look at this image and just remember that if you see something like this in a paid advertisement for another outfit, you don't need to buy it. It exists in this form, completely flexible inside Sierra. And if there's something that you're looking for specifically in terms of settings, talk to us, and we can help you, create it. All right, but this is a permutation of a Renko chart that Sierra calls a Flex Renko, and you select it. You've got some variables in here. What creates this sort of stop and go look is this trend offset being so close to the bar size and this value of 1 being present. So there's 3 numbers that you put in here. All right, this is pretty well documented on Sierra's website. They have lots and lots of choices for Renko. There was a little bit of drama, as Sierra has continued to update its Renko settings, but they have it very, very well documented. So if you're looking for something very specific, that link I put in the answer question to Mary earlier, that went out to everybody. You should be able to find what you're looking for there. All right. Yeah, Arthur, exactly. Unirenko, correct. Looks quite similar. That's what I was going for. I didn't know the exact name, but we do get that from time to time, and this is it. All right, cool. So the next thing I want to do is I would like to talk briefly about some excuse me, some of the functions that that to me have a little bit more utility than just these bar types. So what we're seeing in something like this, where you're looking at the bid volume and the offer volume, and you can see this nice visual representation. This to me there are useful points to this look, but when because this event focused mostly on bars, I thought that I would sort of try to do away with all indicators for a moment and focus on some of the things you can do with just the characteristics of the bars themselves, like on a typical candlestick chart. And that's kind of where I wanted to focus. So what I would like to do is I'm going to open up a brand new chart of the NASDAQ here, or crude or whatever. I'll use the NASDAQ because I've been doing a lot of examples on it. And I'm going to show you some of the things you can do inside Sierra to give you a notification when certain things about the bars themselves are true or untrue. So these are things that anybody, not just a programmer or a developer, can learn how to do. All right, if I can teach myself how to do it, trust me, everybody here can figure out how to do it as well, especially with a little bit of support. And the reason why I want to do this is that so many times the indicators that people are asking about are secondary to the structure of the candle itself. So for example, let's look at this high point up here. Someone might say to me, Patrick, I'm looking for these conditions of X, Y, Z being true, but only if the high of the bar is higher than the prior bar's high. So sometimes what I'm getting at is sometimes these conditions are all contingent on some basic, candle formation that is hard for people to realize they can put into a bit of a code. And one of the things that's really easy to do in Sierra is to create visual notifications when certain conditions about the bars are true. So I'd like to give a couple of examples, and then a couple of, we can take some questions. And, if there's something that you would typically want to see, then, tell us, and then we'll see if we can demonstrate that. So let's just do something really, really basic. Let's just look for a test for when the high of the candle is higher than the high of the prior bar. Okay, super easy example. So the way that I like to do this is by using a study that's called color background based on alert condition. You can also do color bar based on alert condition if you'd rather have the bar be colored itself instead of the background. You can also use color bar based on alert condition if you want to replace the signal with an arrow or a star or something other than the bar itself being colored. But in this case, I'm going to use color background based on alert condition. So what you first do is add the study. So you add the color background based on alert condition study. Now, unlike a normal study, let's just say I want to add an exponential moving average. So I click on it, I click add, I hit apply. All right, the EMA shows up. Of course, I can configure it, the color of the line and how many periods it is and that sort of thing. But the color background study is not like a typical study because we have to give it some instruction. It doesn't know what the alert condition is. So when you add the color background based on alert condition study, the first thing you want to do is go to settings and then click on the alert tab. And in this alert tab is where we are going to type in the code that is going to generate the alert. Now the nice part about the code, so to speak, is that it's not really code at all. It's just really basic operators. H for high, L for low, O for open, C for close or current price, V for volume. There's also BV for bid volume, AV for ask volume. So there are some other operators you can use, and they're also very well documented on Sierra's website. But in this case here, for the example that we're looking for, you would just do H, meaning the current high, is greater than H, and then with a -1 in brackets. All right, what this means is that the high of the current bar is greater than the high 1 bar ago. All right, so the high of the current bar is greater than the high 1 bar ago. In the subgraphs tab, you can control the color. Let's just make it a light green color, push apply, and you can see, wow, this is true a lot. All right, so this particular pattern of the high of the current bar being greater than the high of the prior bar happens a lot. All right, now the first inclination that most people have, which we will entertain here, is, okay, well, wait a second, how do I filter this condition a little bit more so it's a little bit less, common? And one way to do that would be to require that not only is the current high greater than the high prior, but also that the high prior is greater than the bar before that. So how would we combine these conditions to be one big condition? Well, what you would do is you would separate this condition by a comma, and you would do H -1 in brackets, that's 1 bar ago, the high, is less than the high, 2 bars ago, like this. Now that we have two separate conditions, you would just put the word and in front and encapsulate the whole thing with a parentheses like this. So there's two conditions in here. One of them is that the high is greater than the high 1 bar ago, and 1 bar ago, the high was less than the high 2 bars ago. And both of these things need to be true in order for this condition to be true. So once those are in place, we can push apply, and we're going to see a bunch of them go away. A bunch of the signals we had prior go away. So this is an example of how somebody can, you know what? I actually flipped this around. This should be greater than here. So the high of 1 bar ago is greater than the high 2 bars ago. Sorry about that. Okay, that looks more like how it should. So what you should generally see is you should see a notification when the market is rallying. All right, so the high is greater than the bar prior's high, and the bar prior's high is greater than the bar before that's high. All right, Joe, to answer your question, yes, that's correct. We're not going to display that here because this is a pretty neutral event, but if you're interested, just talk to your rep in our office. We can get them on for you. All right, so now what I'd like you to start thinking about is, okay, now that we can establish when we're being notified that when the market is rallied, let's say 2 bars in a row, what can we then incorporate to filter the study even further? So sometimes, traders love reversals. So there's there's sort of like a need, I think, when people start going down this path to figure out, okay, where do I get a confirmation that the market is now reversing? And one way to do that is to not just look at the highs, but actually look at lows as well. So in this example, we're basically looking at the current bar versus the prior bar and the prior bar versus the bar before that. But we can also look at the current or the low of the current bar. So one way to sort of test for this is let's open up this parentheses and add another condition. So we could say something like, let's say we were to say the low of the current bar, which is going to be L, is less than the close of the 1 bar prior. Okay, you can see how I've incorporated two new mystery conditions in here. One of them is operators. One's the L for low, and then one is the close, or if we're talking about the current bar, the current price. So we're adding this condition, the low of the current bar is now less than the close of the prior bar, which means if this were all true, the market has to be rallying 2 bars in a row. In the current bar, it has to have made a high and then come down through the close of the prior bar. So that's probably less likely to happen. So where you would see this notification happen in real time is if the market had rallied and now it's retreating off that high, which has just been a new high, and now it's breaking through the close of the prior bar. So if we apply this, okay, we're going to see some of these go away. Now, again, we can continue to filter it. We could actually say, all right, the next condition is we want the low to be less than the close 2 bars ago. So not only, not only does the market have to be retreating past the close of the prior bar, it actually has to retreat through 2 bars ago. All right, so we apply that, and you start to get, you start to get more and more, specialized. All right, and then this is where you start to see, this is like a good way of taking like your English hypothesis, like something you could say to me, and put it in the form of a code that is really not that complicated. Okay, now when you look at this, like if you just walked into this webinar and you saw this, it might be a little intimidating, but as you can see, we're just picking through this, piece by piece by piece. All right. Okay, Arthur, to open the parentheses, you merely type the comma. Each comma enables typing a new condition. This has 4 conditions, correct? Yes, that's exactly correct. All right, so when I said open the parentheses, what I really meant was I just was deleting it and then putting a new condition and then re-adding it. All right, but really, you don't have to delete the parentheses. You could just add a new comma and then put a new condition in. Right, so this has 4 conditions. This is one of them right here. This is the next one. This is the third one, and then this is the fourth one. All right, and when you look at this, this actually this actually looks more like a cell signal, right? So for kicks, I suppose I would make it red, but it actually doesn't look that bad. I mean, there's probably a few missteps in here, but what you're basically seeing is in real time, you're getting a notification when the market is retreating off of its high strong enough where it's eclipsing both of the low of the prior 2 closes. So, that's not an awful signal. And you could see that this is a way for you, and you could incorporate this with other studies. So this can be incorporated with moving averages. It could be incorporated with, pivot points. It could be incorporated with value area. It could be incorporated with anything that you can think of. So if there's another condition that you might want to add to something like this, it can all be done with relative ease. All right, there's let me show you before I forget, there's a page on Sierra's website that talks about these alerts. And I'm going to post that here because it's where all this stuff is documented. Here it is. These are called base graph identifiers. So I'm going to send this to everybody. So what this means is things like the open, the low, open, high, low, close, the volume, number of trades on the bar, that's NT. These things are all being tracked by the charts in real time to the point where if you're looking for just this stuff, you don't need to have a study that shows you this. It's all there as it is. All right, you can have a study that shows it to you, fine, but you don't necessarily have to. All right, so there's another question that came through from Greg. What I'm going to do, Greg, real quick is duplicate this chart. Let's tile these vertically. Arthur, you wanted to see the code again. I'm going to put the code in a message to you, and obviously if you want the file, you can have it, but we're probably going to come back to that anyway. There is the code that we just used. All right, so let's clean this chart off here. Oops. All right, so now we have a 5-minute chart. So one of the things Greg had asked is, how about decreasing delta? So another way of saying that is the difference between the ask volume and the bid volume is going down. So presumably it's getting narrower. So there are some operators on this page, actually, incidentally, that we were just looking at called BV and AV. So I guess one way to do that would be to add that color background study. This is a bit of a test here, but we're going to find out. So bid volume minus ask volume is less than bid volume 1 bar ago minus ask volume 1 bar ago. The current delta is less than the delta 1 bar ago. So that condition is not untrue, but I'm starting to wonder if I'm getting thrown off by the fact that there's negative numbers here. It's almost like you'd need an absolute value of this to make sense. Okay, that's worth exploring, Greg. I mean, Well, let me think of a way to do that. Yeah, that's probably there's probably a way to do that, sort of hard coded into Sierra. So what you're basically looking for is, let's think about this. That's a good question. Ask volume difference bars. So this here is let me just, again, whittle down this. This is an ask volume difference bar. So you'd like to see if the delta is getting smaller, but the price is going higher. So by smaller, Greg, do you mean more negative, or do you mean closer to zero? It's just a little bit of interpretation, I suppose. But yeah, I mean, that's definitely something that could be tested for either way. Less, like more negative. So you're looking for an increasingly negative delta, but a higher price. All right, so if that were the case, let's just show. Yeah, Tom, see, I appreciate that. But what I'm really trying to, and believe me, I love Lee. What I'm trying to show people is I'm trying to empower people on an individual basis on how to use the program, I have no problem with people purchasing stuff for Sierra as long as they're getting the support for it. But, we want to teach people how to do it, And plus, going through this process is useful. I mean, it forces people to, inventory their own process a bit. It's something we do strongly believe in, All right, so let's just try to give this example. So let's say, Greg, that we want to be notified when the price is going higher, but the delta is going further down. So we'll do the color background. We have an ID number for the ask bid volume difference, which is going to be ID1 SG4, which is going to be the closing or the last final price. So in this case, -8. So ID1 SG4. So for the color background study, the first determiner in the alert is going to be the closing price has to be higher than the prior bar's close, right? So closing price greater than the prior bar's close. And then the next condition is ID1.SG4, which is the last value of the delta, is less than ID1.SG4 one bar ago. Like this. Okay, there's two conditions in there, so we do need an AND condition. And let's just see if we get anything. I'll just make this a light blue color. Okay, so there's some. Okay, so this is a situation where, like in this case here, if you look at this one's a pretty stark example. So this one here, you've got a lower delta, than the prior bar, and you've got a higher closing price right here. Not by much, but by some. So that is definitely something you could incorporate into your analysis. And the nice part about this program, folks, is that if you have ideas like this that you can spell out logically, like what Greg just did, then you can probably create a condition that encompasses that. And it's not like you necessarily need to eliminate everything off your screen, but yeah, it sure would be nice if you could, pretend it's not just the ask bid volume difference. Let's say we've got, 5 or 7 other things up here, and you could just hide them and just be notified when the condition itself is true. So that is one of the main goals, that people using Sierra and listen to these events and watch the recordings are trying to do, is to spell out logically the conditions they're looking for, and then employ them this way. Here's another example that kind of came up recently. Let me see if I can remember exactly what this was, but I'm going to add here's a NASDAQ chart. I'm going to do a kind of a short time frame. So let's call it 1 minute. And then I'm going to add a CCI on here. And this is not my normal thing with the CCI, with the value area, that you folks have heard me talk about. This is just something a little bit different. So most people know that these oscillators are all very, they're not, a lot of them are very similar, or they're sort of momentum studies. So someone was telling me that they were looking for, okay, so here's an example, is that you're looking for 2 higher bars in a row, and then you're looking for the low of the current bar to break the low of that high bar. Okay, so I know that sounds crazy, but let's try to talk that through. So what I'll do first is add the color bar based on alert condition, or color background based on alert condition. So when you're looking at a strategy that requires something specific out of the last few bars, what you always want to do is start your logic with the bar that generates the signal. Okay, so the first condition in this, for the last condition, as I spell it out in the order of time, would be that the low has to be breaking, the close of the bar has to be breaking the low of the prior bar. That's the last thing that actually you would care about if you were saying this to somebody, but when it comes to building the condition, I usually like to start at where the trade fires and work backwards. So in this case here, I'm going to say the low of the current bar is less than the close 1 bar ago. All right, so that's my first condition. All right, the second condition, there's a couple obvious ones here. It doesn't really matter what order that these are in, but we were definitely looking for 2 consecutive higher bars, 2 consecutive highs. And we wanted those in the 2 prior bars. So I would say the high 1 bar ago is greater than the high 2 bars ago. Okay, so we're looking for consecutive highs up to this point. And then another thing that you might look for is you're looking for the CCI to have turned. Okay, and it doesn't have to be the CCI, it could be something else. But in order for us to show when the CCI is turning, we need to imply in this condition that it's currently lower, but it used to be higher. Okay, so here's how that might look in the context of, like, this is like change in slope. So if you've ever wanted to test for a change in slope of the line, okay, you could say something like this. So the CCI is ID study number 1, and the subgraph itself is going to be ID1. So ID1.SG1 is less than ID1.SG1 1 bar ago, which means that it's going down. Okay, the CCI is, this needs to be, why do I keep flipping this around? This is less than. The CCI is less than the CCI 1 bar ago, okay? But, and sometimes, you know, copy pasting makes things a little bit easier, especially for someone like me. The CCI 1 bar ago is greater than the CCI 2 bars ago. And what that implies is that there was a change of direction. So we now have a series of conditions in here. I don't know if this is going to yield anything, but if we put the word "and" in front and put the whole thing in a parentheses and give it a color here, we might see something. Okay, that's a little bit too much. But if we were to read this to somebody in English to tell them what the condition is, it's basically that the low of the current bar is breaking the low of the prior bar. The high 1 bar ago is greater than the high 2 bars ago. And the stochastic, or excuse me, the CCI in this case has changed directions. All right, so when the stochastic changing direction, or the CCI changing directions here, is probably the most confusing part of this bunch. Okay, the slope, we could probably do a separate window that shows that. But this is an example of, you know, how you can come to the conclusion of whether or not this, you know, fits into your profile. All right. Kevin asked, can you put both of those charts together? So I imagine you were talking about these 2 charts, right, Kevin, because we were on this screen. I mean, sure, you definitely could do that. In fact, let's just duplicate this chart. We'll tile them vertically on the screen. All right, so here's the one we were on, here's the one before that, and here's both of them. So let's just get the text out of this one, like this. So I've just copied the text out of it. And then if we go over here and then just add this in, you can take out the "and" because we already have an "and" in the front there. Take out the open parentheses. So it's now one giant condition. Okay, we might it looks like we may have done away with a lot of our signals. Looks like okay, so we successfully eliminated all signals by doing that, Kevin, but that happens. That's part of of doing this. So there's probably something in here that conflicts, and you just have to go in there and figure out what is it that jammed it up, or maybe it's just too specific, for again the context of the Nasdaq. Let's go to a 1 minute chart. Okay, so there on a 1 minute chart, that condition is true a little bit. So on the 5 minute, it wasn't. Sometimes one thing when you're doing this sort of testing is you go down to the shorter time frames, you get more signals, and it's a good way to see if your formula makes sense or not. So yeah, you did create a signal inadvertently that that is generating a signal. Of course, you'd have to go back and see the value of that. All right. Dick says, when you say the previous bar is that the open? Oh, is that the open to close or the bar's high to low? So when I'm saying the previous bar, we're talking about the previous bar's close, not necessarily the previous bar's range or anything like that. So I was specifically referring to whatever operator of the prior bar that the formula was saying. So if we were saying that let's go back here. So in this case here, when I say the low is less than the close 1 bar ago, that just means that the low of the current bar is lower in value than the close of the prior bar, meaning it's a lower price. So we're not talking about the range or any other aspect of the bar that is subject to any kind of interpretation. We're simply looking at the low of the current bar is lower than the closing price of the prior bar. Okay. Priscilla, good question. So Priscilla says, it looks like the signals fire on different bars and the and eliminates both. Can you put both conditions onto the same chart without the and? So that's actually an outstanding question, and I probably would not have covered it, but let's do a quick example of how that comes into play. So let me duplicate this CCI one real quick. All right, now I'm going to do a different example here, Priscilla, just so you can sort of see what I'm getting at, but let's get rid of the condition. And I'm going to reduce the CCI to values of 100 and negative 100 so that these lines are not as far away, just for the sake of demonstration. So this is going to be 100, this will be negative 100. Okay, so there's our lines now. And in the conditions tab, what we're going to be looking for is behavior of the CCI relative to subgraph number 3, which is the upper line, and subgraph number 4, which is the lower line. So ID1, SG3, and ID1, SG4. That's how we're going to be identifying those two lines. And then the CCI itself is ID1, SG1, as you can see here. So an example of an OR type condition here, Priscilla, would be like this. So let me just change the color here. We could say ID1.SG1 is greater than ID1.SG3, which is our upper breach of the CCI, okay, comma, ID1.SG1 is less than ID1.SG4, which is the lower line. All right, and instead of using the word and at the beginning, you use the word or. And if you use the word or, then what or is doing is it's looking inside the parentheses, and it's going to tell us anytime anything in the parentheses is true, not everything. So in this case here, what I told the chart to do is paint the black or the gray background whenever the CCI was below this line or above this line. And that's the behavior that we're getting. So if you have a series of conditions where if any of those things could be true, could make the condition true, then you would use or. Another thing that you can do that gets, this is where things get, a little complicated, but let's say that you've got 3 conditions, all right, inside the parentheses. But one of the conditions has like 2 sub-conditions where either of those things being true could make the chart true or the signal true. You can put an or with the parentheses inside the and parentheses. Okay, so this could actually be inside of a giant parentheses with the word and at the front, where it's looking inside here to see if any of these are being true. So Greg, the answer is yes. Priscilla, the answer is yes. So again, you just have to sort of spell it out. And there might be situations where you're looking for like one of 3 things to happen, And if any of those three things are true, then it satisfies the rest of the condition. So that is definitely something you could do. All right, I kind of got off kilter here with the indicators. I was trying to stay away from those, but these are really clear ways to explain, how to create these things. Barbara, yeah, so that's what I just was saying. So Barbara asks, can you have both the and the or on the same chart? All right, so let's do an example of that. So here's the CCI, and let's tile these again. Oops, sorry about that. Okay, so here's the duplicate we just made on the right. All right, so what I'm now looking for in this hypothetical example is I want to see if the CCI is on one of these extreme areas, okay, and something else is happening. So the CCI, this condition has to be true in order for the condition to be true. So to make it so that this is working in conjunction with something else, we could say something like this. All right, so we're gonna put a comma here. C is less than C negative 1 brackets. Okay, so what I'll do then is put the word and in the front and put the whole thing in one giant parentheses, like that. So what this condition is saying is that if any of this is true and this is true, then the whole condition is true. All right, so let's just change the color of this, and what will probably happen is we'll see maybe a couple of these gray lines go away. All right, and I just changed the color there. So what we're basically looking for in this case is an extreme CCI, relatively extreme CCI reading, and a falling price. So if any of these things are true, because the word or is in front of that parentheses, and this condition is true, because remember, the and being at the front here is looking at everything inside this parentheses. So one of those conditions is this. All right, so if any of this is true and this is true, then the whole thing is true. All right, so it's a very powerful aspect of this program that, you can get into it. I mean, you really can. The formulas can get complicated, but nobody, not even me, after doing this for as long as I have, looks at a formula and just instantly starts typing this out like we were all, Neo in the Matrix. I mean, you got to do it piece by piece. And when you start breaking it down into these little sections, it just doesn't become so intimidating. I don't feel like I've learned any programming. All I've done is learn how to use the operator and, make sure I, went back to my junior high math and I had the right parentheses in the right places. My 3-year-old is learning how to do it, I feel like. So, I feel like anybody can do this. The tough part is being able to logically spell out the conditions. Okay, so Kevin asks, how about a higher degree of slope on the CCI line? So there's actually a study, Kevin, that you can incorporate called study angle. Okay, it's actually a separate study called study angle. Okay, it's in here somewhere. Study angle, so you would apply it. And then in the study angle study, you actually specify what is it that we are using, and I'm going to use the CCI, and then you pick like an anchor point, 10 points back in my case here, and we get this kind of behavior. So it might look like this. So the smaller this value, the smaller that this value is here, the closer in it's looking. So the angle could get very high. If you look a little bit further back, it might look a little bit more muted. So this is looking 100 bars back to now. So this can be referred to just like anything else. It's ID3 SG1. So ID3 SG1 is greater than ID3 SG1 1 bar ago. Same concept. And that could be added to the alert, right? It could be added to the alert just like anything else, right? But this is again, this is part of you using this program to the extent that it was designed is I think most people don't get quite this far into it. It's a lot easier to buy stuff or just as soon as you see the coding stuff, I know people's eyes just glaze over. I was the same way. It was a client of mine who actually told me that he had written one of these conditions where if he had a really bad discipline problem that he copped to, and he told me that he made it so that if he was long the market and his screen turned red, meaning like this color background study turned red, he would immediately get flat, no matter what. And I thought that was pretty fascinating because what it did was it relieved this gentleman of the responsibility of making the decision to get out of the market. The screen turns red, meaning he had some filters he was looking for that were, if he was flat, he would consider going short. They were generally bearish conditions. So whatever those conditions were, maybe something crossing something else. I don't even remember what it was, but it was a very powerful discussion we had because it opened my thinking to the idea that this could help people who are sitting in their offices or houses or whatever with no camaraderie, no one looking over their shoulder. How do you force somebody to follow the rules? It's really hard when you don't have someone standing behind you slapping you in the back of the head when you make a mistake, right? Even the trading rooms, no one's really watching. People are typing whatever. You don't even know if half the stuff you're reading in there is true or if it's being done in a simulator, right? So it's just really hard to use that as part of your discipline process. But if you have a series of conditions that not necessarily give you some magic edge, but just give you something that are, puts you in an ideal condition or an ideal situation to either not get your head ripped off or have a chance at a good trade, then this could be a way for you to help relieve yourself of some of the responsibility of having to monitor all this, as quickly as we're all forced to with the amount of data we're all, processing on a daily basis. So that is, to me, the use of this. That's where this really comes into play. So it's not just the entries; it's also, staying out. We did a webinar a long time ago that comes to mind about how to stay out. We called it like the no chop zone or something. It was about staying out of, we highlighted the whole background of the chart when the ADX was under a certain value. And if you were looking at your chart and it was, that light yellow color, no matter what happened, you didn't take the trade just because it had a tendency to chop you up. Those sorts of things could be just as useful. So things to, keep you out of the market. If you have a flat, X indicator or a flat whatever, and there's not enough volatility for you to take a position that has a positive expectancy, and your chart is that color, you just don't take the trade. Or if you're in the market and your red color comes up, you get flat. If you're short and your blue color comes up, you get flat. There are ways where you can help sort of relieve yourself of the responsibility of having to make that decision, when there's no one holding you accountable for it. So that's kind of, I imagine that's probably where I should leave it this time around. I'm going to save these files here and try to rename them in a way that describes what's on them. So if anybody wants a copy of these to work off of in conjunction with the recording, which we will have on YouTube within a day or so, anyone who registered here should get an email in the next 48 hours or so with a link to the recording, the files. We'll send them to you. Nothing's for sale. You can have everything you want. And if you go back and watch the recording and you go through some of these, and then we can use this for the next time. So maybe next webinar we'll do something, similar where we can talk about some of these functions. But it truly is a valuable part of the program, and I encourage you to lever this and our accessibility while you're in the learning process. So please feel free to do that. I should mention that if anybody has any folks or trading friends or buddies online or anybody who you feel could benefit from this sort of instruction, or if they're in need of some kind of assistance and they're not getting this kind of attention from their existing brokerage company, please feel free to refer them to the representative you work with in our office directly. That means a lot to us. Infinity is a boutique firm. We grow our business through referrals and word of mouth and our reputation, and we would very much appreciate the opportunity to earn your colleagues' business as well and make you look good. All right, so thank you so much. If you want copies of the files, please don't ask me here because I won't be able to save your email address. Just send or an email directly to your rep in our office. I'll make sure that everybody has a copy of these. Worst case scenario, by 7 a.m. tomorrow, we'll get them out to you at the very latest. Okay? All right. Cool. Well, thank you. I very much appreciate it. Thanks for taking the time to listen. I will read some risk stuff here. We'll wrap up the presentation. Make sure you save those links. And if we can help you in any way, please share with us. Okay? All right, folks. Thank you. We'll see you next time. Appreciate your time. Thank you again. All right, folks. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time Past performance is not indicative of future results. Alrighty, thank you. Have a great day.